Welcome back to Investing Talk Podcast.
Today, we're looking at Coeur Mining. And honestly, this isn't just a mining stock. It is a company that just pulled off a massive financial U-turn.
As usual, before we start, subscribe, like, and comment to this video to support the show. So a massive U-turn, that is quite the hook.
It is, but it's true. We're talking about swinging from completely negative free cash flow in 2024 to becoming a massive cash generator in 2025.
Right.
And, doing all of that while executing a transformative $7 billion merger. It's wild.
It is a lot to digest, for sure. I mean, usually when companies are bleeding cash, they don't go shopping for a $7 billion deal.
Exactly. They hunker down. But Coeur went the exact opposite direction.
Well, let's open the books and actually look at the raw numbers, because if they are spending that kind of money, the fundamentals better support it.
Oh, they do. The Q4 2025 earnings report just dropped prior to us recording today, and the top line is incredibly strong.
Yeah, I'm looking at the print right now. Revenue came in at $678.8 million.
Which is a clear beat against the street estimates.
It is. And if you zoom out to the full year of 2025, revenue hit approximately $2.1 billion.
That is a staggering amount of capital flowing through the business.
Right. But revenue is just vanity if you don't keep any of it. What about the bottom line?
Adjusted earnings per share was 35 cents.
Which is an 11% beat. The consensus was hovering around 32 cents.
Right.
So mathematically, yes, a solid quarter. But let me stop you there for a second.
Sure.
Whenever I see miners suddenly posting big numbers, my first instinct is to ask, did they actually fix the business, or did the price of gold and silver just bail them out?
That is the right question to ask, because a rising tide lifts all boats, right?
Exactly. Even bad miners make money when gold hits record highs.
But that is the thing here. The why behind this growth is actually production-driven. It is operational.
Go on.
If you look at the year-over-year data, silver production is up 57%.
57% in 1 year.
Yes. And gold production is up 23%. So they are physically pulling significantly more metal out of the ground. It is not just a price tailwind.
Okay, pulling 57% more silver doesn't just happen by asking the guys with the shovels to work faster. Where is that coming from?
Two main drivers. First, the Rochester expansion is finally delivering.
That project was a headache for a while.
A massive headache. But they ironed out the bottlenecks. The bigger driver, though, is the Silvercrest integration, specifically the Las Chispas mine.
Right. They brought that online recently.
They did. And in just 10.5 months, that one single mine generated $286 million in free cash flow.
Wait, $286 million from one asset in under a year.
Incredible, right? It is a phenomenally high-grade, high-margin asset. That is what really turbocharged the U-turn you mentioned earlier.
Yeah, let's talk about that U-turn, because I can be highly skeptical of mining executives, but the financial turnaround here is, well, it's undeniable.
It is night and day.
In 2024, their free cash flow was negative $9 million. They were burning cash.
And in 2025,
free cash flow hit $666 million.
a completely different universe.
It really is. And naturally, I wanted to do a balance sheet check, because usually rapid expansion means a mountain of debt.
Which is the classic mining trap.
Exactly. But cash on hand actually ballooned more than 10 times. They are sitting on $554 million.
Which gives them incredible flexibility. What about the debt?
They paid it down. They knocked out 42% of it. That is a $250 million debt reduction.
That is exactly what you want to see in a bull cycle.
Their debt-to-equity ratio is now down to a very healthy 0.12. So they aren't just making money, they're actually fixing the house.
And fixing the house is what allowed them to build a competitive moat. Which brings us to the pending $7 billion all-stock deal with New Gold.
Right, the M&A. This is where companies usually trip up.
Sometimes, yes.
Yes.
But explain the scale of this. What does New Gold actually do for them?
Well, according to the filings, this vaults Coeur into the top 10 precious metals producers globally.
And top 5 for silver.
Exactly. And the reserves are massive now. Year-end 2025 reserves sit at 4.4 million ounces of gold and 274.4 million ounces of silver.
That reserve life is critical. But there is another angle here. It is the North American asset base advantage.
You mean jurisdiction safety?
Yes. You have Rochester, Wharf, Kensington, and now the New Gold assets.
Yeah.
In a world where miners are constantly dealing with geopolitical instability, having that base in safe jurisdictions is a massive premium.
Okay, the fundamentals are solid. The balance sheet is clean. Let's pivot to the charts. Looking at the price action, how is the market digesting all this?
The market reaction to the earnings and the new gold news was very telling.
Yesterday, February 19th, 2026, the share price jumped 5.0%.
Right. And that is what we call breakout momentum.
Because it is pushing past those previous psychological resistance levels.
Exactly. When a stock hits record highs on the back of fundamentally transformative news, the psychology shifts. People stop selling into strength and start holding for the ride.
But a 5% jump can just be retail traders piling in on a headline. Does the volume actually back this up?
It absolutely does.
Yeah.
This is not just retail buying. We are seeing major institutional flow. It is smart money.
Do we have specific data on that?
Yes, look at the Q413F filings. Susquehanna added 5.26 million shares.
Wow.
That position alone is valued around $107 million. And Mireille increased their position by 21%, bringing them to 5 million shares.
So the big quant funds and asset managers are looting the boat?
They are. Surging volume alongside a price breakout is the textbook confirmation you look for. It validates the move.
And structurally, looking at the chart patterns, we are seeing consistent higher highs and higher lows.
It is an established uptrend.
Yeah.
And if you map that price action against the fundamentals we just discussed, it fits the RP profile perfectly.
Growth at a reasonable price.
Exactly. You're getting top-tier production growth, but the valuation hasn't completely run away from you yet because it is still shaking off the old turnaround narrative.
That makes sense.
What is the street saying? Because the analyst perception seems to be shifting rapidly.
The overall mood is definitely bullish. I am looking at the recent price targets.
Roth just put out a new one, right?
Yeah, Roth reiterated a target of $26, and that is dated just a week ago, February 12, 2026.
And TD had them at $25 back in late 2025.
Right. But it is funny, if you look at some of the automated quantitative ticker scores, they are flashing neutral, giving a 0.
Those algorithmic scores often struggle with complex M&A situations. They see a $7 billion all-stock deal, and the algorithms just flag it for volatility.
But the human analysts reading the news flow, the earnings beat, the free cash flow, the merger logic, they are overwhelmingly positive.
Precisely. The humans understand the narrative shift. And clearly, the institutions agree, because institutional ownership is currently sitting at 73.73%.
That is huge. That provides a really solid floor for the stock price. Big funds don't usually panic sell on a slight miss.
They hold for the long thesis. And the narrative right now is simply that bigger might really be better with this new gold acquisition.
All right, I hear the bull case. It sounds great, but let's play devil's advocate. Every mining stock has skeletons in the closet. What are the risks here?
Integration risk is the obvious starting point.
Right. Merging a $7 billion company is hard.
Very hard. The new gold integration will demand significant capital expenditure and immense focus from the management team.
And if they are distracted by the merger, things can slip at the existing mines.
Exactly. And their operational history isn't perfectly flawless.
Yeah, I have notes here about the Wharf Crusher fire. That took a toll.
It did. And before that, they had those previous recovery shortfalls at Rochester.
Right, where the ore wasn't yielding the silver they projected. It reminds you that this is a physical business. Equipment breaks. Geology surprises you.
It is a constant battle against the earth.
And then there is the macro picture. Let's talk volatility.
The beta,
Yes, the stock has a beta of 2.03.
meaning it is twice as volatile as the broader market.
Exactly. If the S&P drops 1%, Coeur is likely dropping 2%. If you are a listener who gets seasick easily, a beta of 2.03 is going to test your stomach.
It is a high-leverage play on precious metals.
Now let's talk geopolitics. We praised the North American base earlier, but they have major exposure to Mexico.
Las Chispas and Palmarejo.
Right. 80% of their cash taxes are tied to those Mexican operations. That creates some real jurisdiction risk.
It does. Regulatory changes, labor disputes, or tax shifts in Mexico could severely impact that free cash flow engine we were just raving about.
It is a concentrated risk. Finally, on the risk side, I want to do a valuation check. The PE ratio is sitting at 34.88.
And it is a premium multiple.
34.8 is practically a software company multiple. Is that too rich for a miner pulling rocks out of the dirt?
I would argue that it is a fair premium paid for massive free cash flow growth and scale.
Defend that a bit.
Think about it. You are buying a company that just increased silver production by 57% and flipped from burning cash to generating $666 million. You don't get that kind of torque at a discount PE.
So you are paying for the future state, not the trailing earnings.
Exactly. The market is forward-looking.
All right, we have covered the books, the charts, the street mood, and the risks. Let's move to the final scoring.
I'm giving Coeur Mining a bullish score of 9 out of 10.
9 out of 10. That is a conviction rating.
It is. The thesis is just too strong right now.
Give me the recap.
The elevator pitch is simple. 57% silver growth, $666 million in free cash flow, a fortress balance sheet.
Hard to argue with those 3 pillars.
And the new gold deal creates a multi-year reserve life. It fundamentally protects them from running out of metal, which is the existential threat for every miner.
So you see this as an undervalued GRP profile with immediate upside as the synergies unlock?
Yes. But to be clear on the time horizon, this is a multi-year hold.
So not a quick trade.
No. You want to be looking toward the closing of the new gold deal and the 2026 earnings to really see this play out.
My final verdict aligns with yours. It is a buy for production scale outpacing peers in a metals bull market.
It is a textbook turnaround execution.
Don't forget to subscribe, like, and comment to support the show. We'll see you in the next one.